Yo, good morning, everybody. What is up? I missed you. Did you miss me? Long time no see. Welcome to our weekly show where we talk about futures. Yes, this is futures trading with NinjaTrader. I'm Spencer Israel. I've got Jim Cagnina here with me, and we're going to talk about the futures market and really what did we do with last week? Last week we had this rip-roaring rally, more or less across the board. What do we do now? That's what Jim is going to try to answer for us today by looking at different futures charts. We're looking at the S&P. We're looking at NASDAQ. We're looking at oil. We're looking at gold. We're looking at Bitcoin. We're looking at treasuries. So a lot to get to on the show. If you have any questions about any type of futures market or futures trading, drop them in the chat for Jim. And here we go. Jim Cagnina, Senior Education Director, Master of Everything at NinjaTrader. How's it going today, Jim? How's your weekend?
Pretty good. Weekend was good. I'm glad to be back at it at the trading desk right now. And how about you?
It was good. It was solid. The weather has turned where I am. It was cold until very recently, but the weather has turned. So spring is in the air. Today isn't today the first day of spring? Yeah, it was yesterday. It was yesterday. Yesterday
Really?
yeah.
It's amazing how time flies. It's March 21st, right? I mean, we already had St. Patrick's Day. It is, hopefully you had fun on St. Patrick's Day. Not too much fun, but it's been amazing.
Never too much fun. Although I last week was a fun week. Not for the people that didn't buy the dip, because those that did got very much rewarded. Let's bring up your charts here. And I guess we'll just start with the S&P futures here. And I don't know what to say. So what can you say about this?
Yeah, I mean, last week, and again, we're in unique times. We're looking at the S&P 500 stock index futures at the CME group. I have the E-mini contract up on the screen. Think SPX, SPY, that kind of thing. This is really a leading market, very liquid. And we were digging, we were hitting rock bottom and still digging on not too long ago, February 24th. And then things kind of stabilized. Then the war broke out. And then again, we were driving toward the bottom. Last week, we had 1, 2, 3, 4 giant green candles. And I'll kind of adjust the chart just to put it in perspective. Buyers came in strong on the 15th, stronger on the 16th, continued on the 17th, and then ended the week 50% back up to where the all-time high was. It was incredible. And my point of view here, Spencer, is these were institutional buyers participating. These were funds, these were investors, whatever it is. This was not a sloppy trickle up, heavy volume, dip, people buying dips, people looking for value. And there was never any sustainable selling in any of those 4 days.
Yeah, it was remarkable to see it. And on Wednesday, you're like, Wednesday morning, you're coming like, all right, well, Tuesday was a good day, but let's see how we do today. Then Wednesday we were rally. Thursday morning, you come in, all right, 2 days, good day. How do we do today though? Then we rally again. So Friday morning, you come in, all right, 3 days is good, but how do we close the week? It's option expiration, and then boom, in your face, 4 huge green days in a row. So what are you thinking here, Jim? I mean, we know, I guess that there's bulls and bears both still have plenty of ammo, right? The bears have a lot of ammo. They can talk about how, monetary fiscal tightening or monetary tightening. You can talk about the fact that we're still in a war, that we have inflation. The bulls have ammo too. They just say, hey, look at last week. It speaks for itself. So where do you stand here?
Yeah, I mean, you're right. There's 2 crosswinds coming at us, right? You have this whole conflict going on in Ukraine, Russia, which is messing up supply chains, commodity prices, particularly crude oil. And that's kind of viewed as a negative, right? And then you have on the other side of the coin, well, it's the same side of the coin. You have inflation, recession, stagflation, rising interest rates, viewed as a negative. And what happens? The stock market rallies. So it's, my point of view is this: it's there's not a lot of places to put investment capital. You have equities, if you could find the right equities that you want to buy. You have real estate, and that market is probably going to start slowing down with interest rates moving on up. And then you have commodities. Most folks aren't keen on the commodity game, so a lot of money is flowing here. I think what's happening.
All right, and this chart looks identical. I guess before we move on, though, do you have any levels here? Do you have a potential setup for us? And any levels you're watching on the upside or the downside, or anything?
Yeah,
like that?
yeah. I mean, for sure. And so, just to backtrack a little bit, this orange kind of channel I drew, support and resistance channel I drew, was when the war started. It was my wartime channel, and we broke through it. Things got ugly. And now we rally back over it. So on the downside, I like that orange line there, 43.80.5, which is just north of the 38.2% retracement. So that area 80 down to 67, I think it's important. And then on the upside, I'm gonna be, I have another support and resistance line drawn pretty close to 4,500. That's kind of a psychological number, right? 4,500. Up to 45.35, the 61.8% retracement. So those are my two ranges. I know my bias is bullish. I'd be looking to buy, my opinion, looking to buy dips.
In what way? Like what kind of a dip are we looking to buy, or where?
Well, so okay, great question. So when I look at this candle structure, we got a low, higher low, higher low, higher low, higher low. Right. And then at the top, higher high, higher high, higher high, higher high, higher high. Trend is up, which makes sense, but we're also making higher lows and higher highs. So once you approach, one of the lows, then I think it's time to pull the trigger. I don't think if you wait till pretty much longer than that, then you're at the risk of the trend being over. So again, I'm looking at these tails from Friday and today, and saying, hey, if we retrace, I want to see a retracement on a daily chart, then I want to go ahead and get long within the scope of the range from today.
Okay. All right. Does the same logic apply to the NASDAQ and the Russell and the Dow and all the other? Because all the stock index futures more or less look the same.
You're right, Spencer. That's a great observation, and you're 100% right. These are systematically in sync now. Right. A lot of times they're not, right. We say, hey, look at this. The ES is up 50 and the NQ is down 190. We have those days all the time in a normal market. Right now, though, it seems like we're having systematic behavior that's based on all these geopolitical factors and based on what's going on domestically, as opposed to them being individual movements between different stock index futures. So again, same thing. 1, 2, 3, 4. Today we're kind of, in a holding pattern. So exactly the same. And if you want to look at the Dow Jones as an example, see the same thing. 1, 2, 3, 4. A little bit of a pullback today. Maybe a good opportunity to buy the Dow Jones. Around 400, 400-ish on the future side.
Wow.
Russell 2000. Same thing, although Russell 2000 is looking a little weaker. It's going to have a hard time breaking through my rectangle right there, which is my what I'm going to call my support and resistance. I'm sorry, my resistance area. If we do break through, though, could be happy times for the Russell.
Wow. What about, let's move away from stocks. What about commodities here? And that's a broad bucket, and we got some different things happening in different markets. So wherever you want to start, have at it, and let's talk about what's going on in commodity land, because those charts are not as in those markets are not as in sync.
Yeah, you're right. So this is the 500-pound gorilla in the room right now, is crude oil. We're looking at the West Texas Intermediary Light Sweet Crude daily candle chart. This is where all eyes are. There's 3 benchmarks that I like to look at. This one, Brent crude in Dubai. And right now, in this particular market, we did have a retracement back, right? We had a situation where we had risk off, huge rally in crude oil, and then things kind of settled down with this big red candle here. And what I think happened, and this was the 9th, right, in the middle of the war, I think a certain amount of uncertainty went out the window, right? What are the Saudis going to do? What's OPEC Plus going to do? What's Europe going to do? What's the U.S. going to do? This took some of the uncertainty out of the market, this big red candle here. And that's why I think we saw that break down. And we've overshot it a little bit, right? So I'm bullish in crude oil still. I'm not eager to see $130 crude oil again. I don't know that we will. But I think we're going to be more on the upside than the downside. And the ramifications are just going to flow, no pun intended, all the way downstream to equity markets, bond prices, and all that stuff. So this is one of those crosswinds that are hitting us in the face we got to pay attention to.
I mean, it was nice to see. I filled up my tank over the weekend, and it was nice to see the price go down a little bit, like a couple cents from the last time I had filled up, but still well elevated from where it was. So you're still bullish crude here. How would you trade this market? This is a daily chart. Do you have to go down on the intraday, or are you just going off your Fibonacci's, or what?
Yeah, so I mean, from a day trade point of view, I would look at there are day trade opportunities. I'd be looking to buy dips on that, and we could look at that day chart, that 10-minute chart in a minute. From just an overall investment point of view, similar approach. I mean, I'd kind of wait for a pullback, maybe to the 61.8%. Really rely on the fibs to try to go ahead and get in. But again, keep in mind on what's going on geopolitically and with the supply and demand equation. But that's kind of how I'd look at it. Wait for a little bit of pull back down, and then try to find some sweet spots to buy.
What about you want to go to gold next?
Let's do it. We got a gold chart right here. So this was really interesting, Spencer. This was completely a risk-off appreciation, right? We've been struggling. I'll put my crosshairs down here. In the 1850s and below for a long time in gold, right? That was normal. It was priced right, 1800 to 1850. But then again, when we went risk off, I don't know if it's a safe haven, a flight to quality, or whatever you want to call it, we finally saw gold behave the way we'd expect it to behave when there's a war. And we, cruised through 2000 like, we just blew by the police officer with the little handheld, speeding device. We blew by him. I mean, it kept going. And then again, I think once the uncertainty kind of trickled out, and we saw this with crude oil, things settled back down. And I'm really going to use this as a gauge. Forget about the news feeds and, Putin says this and Biden says that, and Lagarde does this. This is what I'm looking at is, hey, risk on, risk off. What's gold telling us? Because it really was powerful the way it moved up like that right now. So right now we're at the 50% retracement. I'm open-minded. We can go up, we can go down here. So I'd be looking for short or long day trade opportunities.
4D Drover in the chat just asked what charting platform is he using. 4D Drover, NinjaTrader.
Thank you for that assist, Spencer. Absolutely. Best futures trading chart there is.
That's the one. All right. What markets did we not hit yet? We did not hit on bonds at all. Or we didn't hit on Bitcoin.
Yeah. So, all right. So let's go to Treasury bonds really quick. And this is a bearish setup for sure. But we did have that same kind of safe haven move up in early March. Generally, I'm totally bearish on 30-year Treasury bonds, right? And I'm looking for 148 handle, 149, 148, and then some on the downside. And you can see, ever since it was risk back on, we've had some selling come down here. Now, there's a lot of factors with the yield curve and short-term interest rates. And actually, if I could take this opportunity to put up another CME tool. This is the
free plug.
CME. Yeah, these are based on Treasury futures. This is a yield curve, okay? And remember, yields are inversely related to price. So in that last chart we saw those red candles. That was price going down. Alternatively, it also means yields going up. So you hear about the yield curve on TV until you can't take it anymore. So I thought I would just show this chart. And this is based on the actual futures prices. So it can give you a really good idea what the market's thinking. On the left-hand side, you have the 2-year notes Then you got 3-year, it's ticked up. Then 5-year, tick down. 10-year, tick down. Ultra 10-year, which is a true 10-year, tick down. And then it starts to recover a little bit on the longer end of the yield curve. This middle part of the yield curve is inverted, right? It's negative. It slopes down. In a regular market, without all of this tension, it's usually an upward sloping curve. It's a normal yield curve, right? The longer you're willing to invest in a treasury, the more you should be rewarded. So you get the higher interest rate. Not the case here until you get to the 20-year and then the ultra 30-year. So this is what they're talking about. This is suggesting stagflation. It's suggesting recession. Everybody's worried about it. There's not a lot the Fed can do about it, I don't think. We'll find out. But they, with their monetary policy. So this is an interesting thing to keep an eye on.
Okay, thanks for bringing that up. And again, you can find that at the CME's website. They have a bunch of good tools there. You know what? Actually, I'll put the link in the chat for you guys right now, so you guys can actually get that.
Awesome, thank you. So in any event, overall though, on the whole complex, the longer end of the yield curve, I still expect a lot of downside.
There we go. All right, got to look at Bitcoin here.
There we go. Bitcoin this is an interesting case, right? Now, me and you talked about it last week, Spencer, how it didn't really, behave like a risk-off asset, right? It just kind of puttered around.
Yeah.
And it perplexes me too. But I have a trend line in the middle. I have a sloping upward trend line also. We've pinched our way out of that, right? We broke our way out of that. And my next target up here is around 600, 620 on the upside right here. It does look kind of positive. It does look like there are buyers coming in right now. And this bottom trend line I have here at 675, a long way to go. So I would be looking for places to buy Bitcoin too. And probably from a longer term investment point of view, we have a series of higher lows, which is always positive. Higher low, higher low, higher low, higher low, and a series of higher highs. This trend is up. So that's how I feel about it right now. It's a crazy market. It's hard to figure out, but it's definitely tradable.
How would you approach that?
Again, I would try to buy around that trend line. I would just kind of, wait for little dips and try to get in right around that trend line, which, again, my opinion, I could be wrong, but, around 885, 48.85. This is in the futures based on the reference rate. Okay. So whatever your corresponding, however you're trading it. But I think from a position trade point of view, the CME Group's micro Bitcoin is pretty good.
Why is that?
Because how the margining works, you know what your margin is. You know what you do have some liquidity. You can get out when you need to. You can get in when you need to, and it's behaving in a structurally similar manner than all the other the cash coins.
Okay. All right. There's a few other markets that we sometimes talk about, not always, like U.S. dollar index and natty gas and wheat. So what else was on your list?
Let's go to wheat. This is Chicago wheat, by the way. Chicago wheat futures. This is how the whole board of trade started way back in the day. And then we had, a couple of limit up days, and, everyone's freaking out because of the export limitations that may or may not have been imposed on Russia, depending on which news source you read. But we settled back down here. So we settled back down. It's still an issue. 38.2% retracement level right now on wheat, still bullish. And this is kind of like crude oil, in my opinion. It's going to have an impact that's going to just, permeate throughout everything we do, right? The more it's a basic commodity. We need it, right? We have to feed the world. Everybody needs to eat. And it's going to cause price stress on everything else as this market continues to stay elevated. And it looks like it's going to continue to stay elevated for a while.
It seems like, at least though, that the market is more or less behaving rational, maybe not rational, but normally now. It's not going parabolic. It's not opening limit down or right, whatever. It's consolidating, which is what you want to see.
Yeah, I think you're right. Right. It's trying to find its equilibrium. It's, water seeking its own level. You're absolutely right. That's a great observation for sure.
Sweet. All right. Before we get to the tip of the week, was there any other markets that we wanted to cover?
Right now I think we're good because everything else is pretty much. Well, let's do the ruble. Ruble's always fun.
Oh yeah.
Oops, wait. This is gasoline. Sorry, I clicked on the wrong one. This is just literally behaving just like crude oil. So this is gasoline futures. Sorry, guys, it's going to cost you more to get to Disneyland. I'm still going to drive. I still need to get there. So I'm bullish here too. It's going to mirror the crude oil as we go. No question about it. Ruble. This is my favorite chart of all time.
Man, should we just buy this? I mean, I can't bring myself to do it, but from a pure money making standpoint, should we just close our eyes and Jim and buy this guy?
I don't know.
I can't do it. I can't do it. I can't do
it. Do you want to live dangerously? The funny thing is, though, I really use this gauge, again, kind of like gold, is what's really happening with Russia, Ukraine, and how is this particular relationship, the Russian ruble versus the U.S. dollar, behaving in light of that? And does it match up to what the narrative is on Twitter? And I'm saying no. I mean, this narrative looks positive. We're almost back to a 50% retracement, which is shocking to me. I thought this was going to zero. So I'm keeping this is the first thing I look at in the morning. What's going on with Russia, Ukraine? I look at a ruble US dollar chart.
Have you traded this at all?
No, I know. It's on nobody's radar screen until right here. February 28th. Yeah. And now all of a sudden it's like, wow. CME has a lot of currency crosses that are great. I don't know how liquid this one is, to be honest with you, but from a position trade point of view, there's opportunity for sure.
On the upside, on the downside?
Well, here's the thing. I mean, if you hear the word ceasefire, this thing is going to rally like no one's business, right? Because remember, equilibrium is way up here, 0, 1, 2, 200, and we're way down here. So if you hear the word, invasion of Poland, then we're going back to zero. Mm-hmm. So really, I use it as a guide to kind of get a feel for what the geopolitics really are, and then go from there. Anything else is going to be speculative in the face of potential global danger.
All right. Last week we almost ran out of time, so let's give ourselves plenty of time this week to go into Jim's futures trading tip of the week. Or day. Or week. Whatever.
Tip of the week. All right. So here's what's going on. Last week was the Fed meeting, right? And it's kind of like radio silence the week of the Fed meeting, right? Until the 2:30 press conference. This week, you're going to see every Fed speaker and FOMC member and anybody related to this. They're going to be doing speeches. They're going to be being quoted all over the place. And sure enough, this week we got galore. We got Fed speakers galore. Powell, Williams, Daly, Bostic, Bullard. They're going to keep coming out all week. 12 o'clock today, Powell is actually at a luncheon. It's like 12:30 to 1:30 p.m. Today, and you don't know when he's going to speak. But when the tip really is, when these guys are speaking, the market assimilates information because they think they're getting behind the scenes glimpse of what the longer term game plan is. It's not published. Yeah. And so it's really important to know when they're coming out, what they're saying, and so just be on your toes because it could really move. It could move things.
Yeah. It's a very interesting dynamic to watch the Fed speakers all, lock themselves in a room for a week and then come back out and go out into the world. And they agreement on the path forward. So of course they're going to they're going to be honest. They're going to give their opinions. They're going to say what they think the policy should be. And if you're Bullard, it means, 8 rate hikes or something to that effect. And they're all going to talk up their own point of view, and it's going to create a whole lot of noise. I've never been good at deciphering Fed speak, and I don't particularly like the fact that they all just go out there and just flood the zone with their opinions, and the market is left to try and figure out what it means. But it is worth paying attention to the fact when you have weeks like this week, and you have how many of them? 1, 2, 3, 4, 5, 6 or 7 Fed speakers throughout the week, it will create volatility, especially in futures markets, because you know 24 hours a day. So
yeah, you're absolutely right, and it's literally crazy. So you got the FOMC actually they vote on things, right? So
right,
Chairman Powell has had to get a consensus of his people, to kind of go along with them. And it's if he doesn't, then it shows he's weak. If the vote's close, it shows he's weak, which worries people. So as it should.
yeah. All right, we got about 4 minutes left. Are there any questions for Jim at all about trading futures, about NinjaTrader as a platform, about how he trades, about what he trades? Jim, do we have any active trades on today, or did we have any active trades on today?
Yeah, we had a mixed bag of trades today around the lows, and this is a 10-minute chart we're looking at of the S&P right now, along with the Superdome on the right, and then a quote board on the far right. And what we see today is a low volume day, especially related to last week. Right, we have about a little over 500,000 in the classic E-mini traded so far, which is kind of light with respect to what we've seen, even though it's not light in general. But what that tells me is there's less institutional entities involved right now from long-term repositioning of portfolios and stuff like that. So when you see these crazy big candles up and these crazy big candles down, this is a phenomenon of a different set of participants, retail traders, algos, system traders, really pushing stuff along, creating what I'm going to say intraday volatility outside of a VIX type of calculation.
Okay.
So really, right now we've almost all the way back up to our area of resistance earlier this morning. Again, I'd be looking for places to buy today.
Interesting question here from Christian Gallagher, noting that the Russian bond market opened today. So now there are rumors that the Russian stock market will reopen at some point in the near future. If or when that happens, how do you see that impacting the ruble dollar futures?
I think that would be positive. I think the normalization of those markets, even though they're not going to be normal for a while, that's going to restabilize the ruble, I think. So when the bond market is trading now kind of reasonably, I heard yields are still way wacky today. And their stock market opens up. It'll seek its own level, and then it will. It should be positive for the ruble US dollar.
Okay. All right. Jim Cagnina is the person who's been on with us here. He joins us every single Monday for this show, Futures Trading with NinjaTrader. And he is a senior education and training specialist for the NinjaTrader platform. There are several links that I've been putting both on the ticker on the bottom of the screen and also in the description of this video to learn more. NinjaTrader.com/get started. NinjaTrader.com/futures and NinjaTrader.com/platform trading. I will add for each of those links. You just have to make sure that the first letters are capitalized, right? So get started.
Yeah, but if there's one more link that's really important, it's NinjaTrader.com/events.
Events, that guy. Yep.
Yeah, there you go. So we every morning 9:10, every afternoon 3:15. We do an event, and we try to find trading opportunities. We analyze the markets in real time. We try to find day trading opportunities in the morning, and then in the afternoon. It's a free kind of deal. Everybody could come, you could chat away, and you could kind of give us your opinion, and we kind of go with it. So everyone's welcome to come to the events. Go to the events page, and you'll find out how to do it.
The link is on the screen. Link is in the description. NinjaTrader.com. Here, I'll make it not scroll. NinjaTrader.com/events. There it is. Jim, thanks for coming on as always. We'll talk to you again next week. I'm a little bit surprised at you're just pretty bullish. You didn't seem to mind. I mean, you seem pretty convinced for now about last week's rally. So We'll see what happens this week. We'll talk to you about that next week. So Jim Cagnina, Senior Education and Training Specialist for the NinjaTrader platform. Jim, have a good one. And
thanks you, Spencer. Appreciate it.
Guys, we got to wrap because Benzinga Live is going live right now. So smash that like button. And thanks to Jim. And please remember that all the information from this show was meant to be used as informational purposes and not for investing or trading advice. I'll be over there with Aaron Bree right now. We got a big show coming up, so stay tuned for that. Smash the like. See you over there.